We also have Deven Choksey joining us on the show right now. Very good morning to you, Deven. Thank you so much for joining us in ET Now. I wanted to get your view exactly what is happening in the markets. Banks have taken the charge and how. Record high levels coming in for the Nifty Bank. You have the private sector banks taking the lead. And now you also have the RBI LCR guidelines, which will actually give a further flip to the sector.
Yes, good morning. Well, I believe that I think the overall environment, as far as I think the banking stock is concerned, is remaining quite conducive. In this particular environment, we are basically seeing the fall in the interest rates. We are seeing the NIM getting higher at the same time. And also, I think we are also getting the higher amount of growth in the AUM. Now, all of that, I think, is going to probably create a significant amount of, I think, earning upside for most of these banks. And that's what probably I think we are seeing. Another theory which goes around, public sector banks could possibly see the consolidation. And should that be the reality, then probably I think we are going to see the rally even in those stocks as well. So in my viewpoint, I think the fundamentals remain absolutely convincing, and that's what the rally is all about.
All right, so let's watch out for the banking space. Well, of course, today all eyes will be on the metal counters as well as the banking counters. And just wanted to have your take, Deven, on the IT space, because just yesterday we have seen all these IT counters making a comeback, because for the last three IT names, we have seen the earnings coming in. But do you believe that the worst is behind maybe for the IT counters, and maybe it's time to once again look at to some of the darlings of the market that we have seen back in 2024, especially from the mid-cap space?
So, well, engineering R&D companies in IT space, they remain really favorite because I think their customer segment, they need them, they probably I think put in larger amount of orders. And that's where probably I think the higher amount of growth is. So in my viewpoint, I think the likes of LTTS, likes of LTIM, or even for that matter, Tata Technology, Tata Elxsi, KPIT kind of companies have already shown, I think, good amount of order inflow in them. And they are seeing the higher amount of profit margins, or they're talking about higher amount of profit margins also in subsequent quarters to these order inflows. So we remain relatively more bullish on the prospects of, I think, these companies. Some of the large cap IT companies may still take time. I don't think that I think they're immediately going to show relatively different performance, but at least the downside is limited because the stock price corrections have already happened. So maybe I think from current levels, you might see a bounce in some of them on a given day with the positive news coming into them. We remain relatively more positive on the IT space as a whole. So would like to consider at a lower levels any stocks I think which are fundamentally strong.
Right. Ben, what's your take coming in on the metal space now, given the fact that this sort of a news is now out of the way? What are the key triggers that you'll watch out for if you have to remain invested in the metal space now?
So on one side, the crude oil prices are remaining low, so the input cost is on downside, and probably I think for the next 1 or 2 years, as we see it, I think the import cost is going to remain lower. At the same time, metal as a commodity, I think, is resorting to the alternate fuels, alternate energy, and that's where probably the larger confidence is. Today, if you see, even in parts in some of the metal commodity companies, the intake of renewable power has already started coming in, maybe very small percentage. But going forward, this is only going to grow from here. So given that situation, you are basically talking about higher amount of profit margins for the companies in times to come. May not be in 1 or 2 quarters, but I think in times to come, I think you're likely to see the impact of higher profit margins because of lower input cost. On the other side, because of the safeguard duty, which may be a temporary, but more importantly, I think post-war related situation, I think the war related situation coming under control, that's an indication, of course. But if it is coming under control, the construction activity will start in those economies. And that's where the commodity metal will probably once again come back into the force as far as demand is concerned. Domestically, we remain pretty confident about India domestic demand remaining strong because of infrastructure spending and also because of the industry's capex program. So overall, I think we believe on one side the volume, on the other side the margin. Both are coming in favor for metal as a commodity. Maybe I think it may trade in a range for a while, but I think it's a good opportunity to buy at close and I can sell on rise.
course, the commentary and the guidance will be the key to watch out for. But other than that, they win. The other space that is doing well is the power space. And I was just looking at the data that in the month of March itself, the power demand has seen a good surge, and we are looking in for a hotter summer. So depending on that, seems like that the power demand is expected to just inch up. But within this space and within the listed plays, how do you see the counters moving in any of your top bets here?
One side, we have the generation companies, including the likes of Tata Powers, NTPC, among others, in Adani Power, of course. But on the other side, I think we have got transmission and distribution companies, which are equally interestingly positioned. Within the generation company segment, I think we also have the renewables as I think one of the major contributor now. I think as far as I think the growth is concerned. So we believe that I think given the kind of mixed portfolio, probably transmission and distribution would remain relatively more rewarding proposition as we see, largely because of the fact that I think the significant amount of I think the growth is happening on the generation of power, at the same time distribution, and also the margin factor I think remains extremely positive for the distribution companies. So in my viewpoint, I think the transmission companies could possibly remain relatively more on a stronger wicket. The renewable segments like the solar and the wind and the hydrogen, I think they're catching up and they're going to grow systematically. But at this point of time, there is a capex mode. So probably one will have to selectively look at some of these companies to add into the portfolio. But more preference will be on the transmission and distribution companies as we see it.
Okay, other than banks and IT, bunch of other stocks as well, which are the newsmakers this Tuesday. What's the list like? Snehi,
and get your view actually on the realty space, and how is this one looking to you right now, given the fact that a lot of thrust now is on the domestic oriented sectors, and realty also stands out as one of those big winners when you talk about looking inwards.
Yes, absolutely. I think the premium realty space typically I think looks quite resilient as we see it. The larger part of the spending power is now fueling this particular space, and some of the macros are definitely playing a crucial role. The typical companies which are basically concentrating on premium realty in the housing sector space, they remain relatively more on a stronger wicket because of the higher amount of growth prospects built into it. All said and done, I think most of the things are seen in the price today as we see. The companies are adequately priced as we find today. Unless we find meaningful correction in the price, which we saw in between in the corrective phase in the market, it's not going to be easy to make money. So I think we'll wait for some price correction before buying into good quality stocks in the portfolio.
One. And Deven, I want to get you in here. I don't know how closely you've been tracking Geo Financials, but on the sidelines of the recent earnings, they've highlighted how their various segments are actually performing, and impressive, be it the lending business, the leasing business, insurance distribution, or for that matter, the digital presence as well.
Absolutely. I think on one side you have NBFC vertical, AMC vertical is a second vertical, you have wealth vertical, and the insurance vertical. And within the NBFC space, as you rightly mentioned, the lending as well as leasing part of the business, and even I think venturing into the stock funding, I think for the stock against the security, I think they have started funding in that particular space as well. So from a perspective of looking at this company, it's a complete CIC company, which is, I think, investing into different businesses for the growth sake. The one of significant advantage that they have on one side, balance sheet net worth of about 1,50,000 crore. On other side, I think the customer pool of Geo as a platform, as well as I think the retail customers which are coming in to buy into the stores as well as through AGO, they remain, I think, a very strong proposition for them, that you have a lending ability and you also have the customer on the other side. And in between, you have a significant advantage by way of digital platform, which is a fintech platform that they have. So all in all, put together, it's a perfect recipe for growth as I see it across all the four verticals, all four businesses, and the growth coming in there. Maybe it's still early to start, but I think it's a good time to invest into this kind of companies for long term.
That's a view coming on Geo Financials.